even for the S&P 500, it didn't really move much for the entire day. Yesterday, towards the second half, there was a bit of reluctant rally, but after that, it kind of like flat here. Even right now, go down, go up, not really a big movement. So I would think that once the rate decision coming, it will either go up or go down. But so far, we have SPY put option that is expiring on the 12th of May. I'm still holding on to it. So I'm not sure if anyone else of you are still holding. There's a reason why I'm holding to this is because of the FOMC. I want to hold through the FOMC. And even after this FOMC session, right? Later today, I mean, we are already on Thursday, okay? We have Apple's earnings coming up after the Thursday US market close. And then right after that, we have NFP coming in. So there is still a lot of incoming data. And in fact, okay, so we are about 14 minutes away. And let's go through a bit of the FOMC stuff. Currently, the rate expectation is 25 basis point hike. And that is the consensus. And I do think that there will definitely be a 25 basis point hike. Okay, so the 25 basis point is not important. It has been priced in by the market already, most likely. What is going to be important is all the forward messages. This is the same thing that I have been repeating over many FOMC sessions. So the key thing that we want to know is Federal Reserve is definitely going to pause, because based on the last summary of economic projection, right, the federal fund rate target is 5.1. After they hike 25 basis point today, right, we will hit the 5.1 already. So are they going to commit to the pause or not? So we want to hear the kind of tone, okay? Is it like, okay, we will 100% commit to the pause? Or will it be like okay, we pause for now, but we shall see how things go, that kind of tone. And secondly, right, pausing is one thing, but we also want to know if any rate cut coming in this year. So last time round, Jerome Powell upfront said that there is no rate cut for this year based on the March projection. So the key thing is based on March projection, okay? But since then and now, there have been a lot of development. If Federal Reserve thinks that there are more banks at risk, right, they'll probably cut earlier. So we do want to watch out for the sentiment on cutting the rate hike this year also. So two things, are they going to commit to a pause? Is it like a conditional pause, or are they going to be like really committed to it? And secondly, any form of consideration for a rate cut this year. And also, we have the debt ceiling happening on the 1st of June. Yeah, the US going to default, this and that, blah, blah, blah. But I mean, US will never default, okay? US will never default on their terms. They are not going to choose to default by themselves, which is extremely stupid. Because if they do that, China will definitely come in and like take advantage of the whole situation. So I don't really think US will default on their own terms, okay? So but of course, the condition of raising the debt ceiling, there will be a lot of like drama coming in, but I think at the end of the day, right, they will definitely do something about it, okay? US has a very strong history of committing to all their debt obligation. In fact, US have never ever defaulted on their treasury bond before. Even during World War II, the entire country is at war, but they fulfill all their debt obligation. So right now, I highly doubt they will default. Okay, so I know all these conspiracy theory, like it's very easy to spread all this stuff, sound very smart, but I mean, at the end of the day, right, they are just noises, okay? They are just, I mean, conspiracy theory, okay? So the next thing we want to watch out for is what are they still going to continue with their quantitative tightening? Currently, they are still doing their quantitative tightening now, okay? And in fact, it is a very big they are still selling off very, very big. I kind of forget what is the actual number already. I have not been visiting the number for quite some time, but I do believe it is $65 billion in treasury bond. They are unloading. They are selling $65 billion in treasury bond and $35 billion in mortgage-based security. So nothing have changed with regards to quantitative tightening since like very, very long time ago. Okay, so there's no point in looking at Federal Reserve balance sheet because we already know the QE or the QT plan or whatever. Okay, but the important point is if they make any announcement of, okay, we are going to slow down the unloading, we are going to slow down the QT, then that could be a catalyst for the market to rally. But I mean, right now is a bit gray also. There is a consensus that if Federal Reserve choose to cut the rate or choose to slow down the QT, right, it is a sign that economy is not doing very well. That's why they are taking such action. And in fact, such a decision, right, it can be taken as a bearish sentiment also. So try not to be overly dogmatic on any side of the market right now, simply because we have been in a kangaroo market for very, very long. We have been kangaroo since like last year like that, okay? Market is not really trending. The moment you think it's trending, it come down. The moment you think trending, it will probably come down again. Who knows? Who knows? And in fact, if we exclude this period, right? If we exclude these two extreme peaks, we have been sideways in last year July. Okay, we have been sideways since last year July. But one thing I just noticed recently is this particular candle here. This candle happened on the November CPI data. During that November CPI data, right, market actually rally very, very big. One of the biggest rally we have seen so far, 5.85% rally in the S&P 500. Okay, 5.85% is a 3 standard deviation move. So it does not happen very, very often. And in fact, we have not broke through that level since then. Okay, we have not broke through this level since then. So this does act as a very strong support, 3,800. So if I'm planning for any downside, right, I will plan for 3,800 first. Okay, so overall, I do feel that market have no business being this bullish. But at the same time, we can't really fight the market also. That's the reason why we are playing all these kind of long position here and there, long here, long there. But I do hope that at the end of the day, right, thing crash. I mean, I do feel market should go down a bit, okay? Go down, retest one time, shake out all the mega super bull, and then after that we rally for good. So I do expect one drop coming in. But whether or not if that drop is going to break the bottom, right now is very hard to tell. Previously, I do think that it will be breaking this bottom, but seeing how the inflation is now at 5%, CPI is at 5%, and PCE is at 4.2%, right? On the inflation front, we do seems to be kind of winning the battle, or rather it is heading in the right direction. Okay, so if in the next 2-3 months the CPI goes below 5, back to like 4 point something, right, then I do believe that the inflation fight is over. But now we probably have to worry about other things like the recessionary stuff. Okay, guys, as usual, holy crap, what happens? Yeah. Okay, so don't care the price action for now. Okay, anything before Jerome Powell speak, I'm not going to take action, but I mean just watch for fun. So let's look at the important stuff. Okay, statement is out. Okay, statement is out. So let's read. Economic activity expanded at a modest pace in the first quarter. Job gain has been robust. Unemployment rate remained low. Inflation remain elevated. US banking system is sound and resilient. Okay. Tighter credit condition for household and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remain uncertain. The committee remain highly attentive to inflation risk. Committees seek to achieve maximum employment and inflation at the rate of 2% over the long run. In support of this goal, committee decide to raise target range for federal fund rate to 5 to 5.25%. So average is 5.1. Okay. The committee will closely monitor incoming information and assess the implication of monetary policy. Committee will closely monitor incoming information. Okay, I just read that. Sorry, I'm drunk. I got a wine beside me. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account of the cumulative tightening of monetary policy, the lag which monetary policy affect economic activity and inflation and economic and financial development. In addition, the committee will continue to reduce its treasury security and agency debt and mortgage-backed security as described in its previously announcement plan. So QT is still ongoing. Please I don't ever want to see QT is over when it is clearly stated here, black and white. Committee is strongly committed to returning to inflation to its 2%. In assessing the appropriate stance for monetary policy, committee will continue to monitor the implication of incoming information for economic outlook. Committee will blah 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 adjust. Okay. So the thing about this statement is that not what is inside but what is missing. So you can definitely see something missing. There will be usually a statement that says committee will look forward to raising the rate in the future. So now that statement is gone, right? So this is a pause, but they are also saying things like they will look into account of incoming data, blah, blah, blah. It's a very standard statement now, okay? It's a very, very standard statement. So nothing really ongoing here. So I would say that this fall into the realm of, okay, we are pausing now, but if anything happens, we will definitely assess and raise the rate now. So it's more of a conditional pause, which will be a little bit bearish, The reason why it is a little bit bearish because the market already have accounted for the pause already. The market already priced in a pause based on whatever information that we had previously. Based on the March summary of the economic projection, right? We know that the pause is coming in May, but rather what is the commitment to this pause, and it is more of like a conditional pause. So aside from that, the other important information is the quantitative tightening will continue. So no changes there. So next, we are just waiting for the press conference. Okay, the press conference is the more important one. We are seeing market yo-yo a bit. Oh my God, this is like a theta day. All the time decay are going to get the money unless it crash. Okay, hopefully it crash. It's a meme. This is like very peanut. Yeah, it's a meme. I'm gonna raise the rate until USO stop trading monkey JPEGs. I think NFT now die off already. It's like I don't see anyone saying the word NFT already. Now it's AI already. Now everything is AI. Even the word blockchain, I rarely hear the term blockchain already. Last time it's like every nonsense also blockchain, or hawker center using blockchain technology, warehouse using blockchain technology, the healthcare want to use blockchain technology to keep track of patient data. Now hawker center using AI, healthcare using AI, warehouse using AI. I tell you, every day, all these nonsense, I really want to vomit blood, man. Oh my God, finally it is almost 1 hour long, already 3:20. Okay, so quick recap. I think overall this session pretty much very bearish, okay, quite hawkish. All the stuff we mentioned actually came up. Number one, continuation of the tightening, and it is still at a very, very aggressive tightening pace, okay. Number two, there will be a pause, but it is a conditional pause, and they will not hesitate to raise the rate again if needed, and they are doing ongoing data by data, case by case basis. Okay, so they are going to look at incoming inflation number, all this. And secondly, he has also mentioned that the board of the FOMC they do not think inflation going to come down so fast. Maybe we will kinda like sticky tiao at the 4-5% level. And even then, right, someone asked, what if inflation come down to 3%? Is Federal Reserve looking to let inflation sit at 3% without really doing anything? Powell replied that no, actually the mandate is 2% and they want to hit the 2% no matter what. Meaning if inflation does come down back to 3%, right, they are not going to sit there and not do anything. They will continue to take necessary action. Okay, and lastly, the most important one from Bloomberg, Michael McKee, my favorite guy in the FOMC press conference, because he always asks the question that caused the market to go down. Whenever I have a bearish position, I'm always looking forward to his questions okay, because he asked the tough question and he is very thick-skinned and he don't mind repeating the same question over and over until Powell actually answers. So no rate cut, okay, no rate cut is in discussion for this year. So in fact, he actually asked, what do you think about the rate cut that market have priced in? So he actually, Bloomberg actually thinks that market have priced in a rate cut. And the thing is that Jerome Powell didn't rebuttal that. Perhaps he himself thinks that rate cut has been priced in by the market also. But on, on the more bullish side, right, even though he didn't say it out, Jerome Powell did say the soft landing is possible, even though he didn't use the word soft landing. Soft landing meaning there will be a mild recession. Okay, there will be a recession nonetheless, but a mild recession. So he believed that a soft landing is possible, but you may think of that as a bullish, but I tend to look at it the other way, because market is behaving as if there's no recession. We are back in a bull market. So a soft landing is kind of at this stage right now where the market is currently sitting at. I do believe soft landing is a little bit equivalent to slightly bearish okay. If we are speaking about soft landing when S&P is at like maybe 3007, right, then yes, maybe soft landing is a bullish sentiment. But right now I would say soft landing is more of a bearish sentiment. Okay, so that's basically my take for FOMC this week. But nonetheless, right, based on the price action I'm seeing, I mean, this is by no means a very bearish price action okay, because we are not even breaking yesterday low yet, and we have Apple's earning out coming tomorrow. I mean tonight, after market tonight . So I mean, if Apple's earning come out and then if everything bullish or whatever, right? Like we may see this this drop getting undone . So I mean, if Apple earning is bad, then of course we will see more downside also okay. But nonetheless, this FOMC, I would say this price action here is pretty much flat . Not really anything going on. If I switch back to a 1 hour time frame, it is no different from any other day. It's no different from any other day. If I do not review the day and I ask you to look at this chart and I ask you to point to me the FOMC session, right, you will be quite quite hard to point out okay. We still have NFP also. So between Apple's earning and NFP, right, those are back-to-back event. Apple earning come out after market close, NFP come out before market open, so there will be some potential crazy price movement going on okay. So SPY now back at 410 like that, so it is currently shortly below the strike price. But I think the option right now most likely in the red. But if the market is able to push down everything tomorrow or Friday, right, that will be great . Okay, guys, so that will be all. See you guys on Friday. As usual, we will be able to see the outcome of NFP and Apple's earning. And right now seems like market is recovering a bit. Let's see. Meta is still very far from the bottom, ridiculous. Now it is recovering quite back out already okay. And I also want to point out the effect of the price action due to FOMC, right? It doesn't, I mean, this is not all the price action. Even without any more catalyst, right? Sometimes the effect can last until 1 day later, 2 days later, or sometimes the market can digest overnight, and then after that, 1-2 days later, and then the actual move stuff to come. We see that quite a number of time in 2022 also lah, where during FOMC nothing happened, then after that the next day the market just crashed. So it is possible also. Okay, so unfortunately with this kind of price action, I'm not intending to make any YOLO trade. The YOLO trade on metal, I'll probably look at Friday. We shall look at Friday for any potential YOLO trade if the price action follow through lah. Okay, mainly because number one, our SPY, currently SPY that we are holding, expiring on May 12th, it is still red, not really in the money. So we don't want to sort of pile in another bearish position and then later on Apple's earning and NFP market rally, and then now we are losing twice as much. So I don't really like to double down on losing position now. Okay, if let's say this position is in the profit, right, then maybe we can add more lah, but unfortunately it is not. So yeah, there's no YOLO trade today lah. Okay, guys, so have a good night. See you guys on Friday. If you are YOLOing Apple, all the best. I'm personally not YOLOing lah. Bye-bye. Welcome. Bye-bye. Good morning now. Good night. Bye-bye.